When filing your yearly income taxes, any income that you earn out of province is returned back to your province of residence. So that means if you live in Ontario, you would file an Ontario tax return as normal and just include your Alberta rental income in it. Now, to maximize your wealth on real estate investment, I always recommend holding a property over the long term. Think 5, 10, 20 years. Because if you sell the property within a year after closing, you pay tax on the entire profit as if it was income. It's just added on and typically taxed at a very high marginal tax rate. Whereas if you rent it out for at least a year, then the CRA typically considers this as a capital gain. And this means that only 50% of the profit then is taxable. This could mean the difference between tens of thousands of dollars of taxes that you are needlessly paying to the government. So please watch out and consider this. When filing your taxes, all reasonable expenses of a real estate investment can be deducted against the rental income that you get on that property. This includes mortgage interest, property taxes, condo fees, your landlord insurance policy, rental services, property management services, and any repairs and maintenance, even light bulbs, air filters, anything going towards the property. Be warned, you cannot deduct any of your time spent on managing the property though. The CRA views this as time spent towards the return of your investment. And also, please be sure to keep all of your receipts in case you ever get audited. You're going to need them. I'm not an accountant, so have any questions, consult a professional in your area because tax rules are different in every province.